World economies, United States, China, Japan, California. And I know it's crazy to think about how big our economy is, but from an investing standpoint, one of the things that you want to have is job growth, right?
Yeah.
And job growth is a really, really important part of, especially for LA. Most of the stuff I do is in Los Angeles, not in Northern California.
Right.
LA has, I think, the fourth largest GDP of any city in the world, behind, boy, I'm going to forget these. I know Tokyo, I know London. It might be Paris. It might be Shanghai. I forget what the three are that are in front of us, but let's just say that Los Angeles is a top 5 economy in the world. And part of what makes our economy so diverse is because it's diverse.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
I have David Coe with me. David Coe, I consider to be a personal friend. I remember when I first saw David, remember David? We were at a Jeremey Roll for investor, by investor meeting back in the days when the meetings were actually in a board, like a little tiny board conference room thing. Like maybe it was like, I think there were like 12 chairs up against the table and then like another 18 like up against the wall, because Jeremy's meetings.
Room for 12 people with 30 people in attendance. I remember them vividly.
You were over on my right in the back corner, not total back corner of the room, but you'd sit in that corner of the room and I'd sit on this side. I'm like, who's this dude over there? Like, who's this David guy? He always had such good questions, right? And this was, I started my FIBI meeting in 2011. So this would have been 2009, 2010.
2009, right? I believe is when it was. Yeah.
Okay. And now it's 2022.
Yeah.
Just to time stamp this particular interview. People are going to look at my podcast 20 years from now and they're going to go, oh, that was when she looked young. But I'm not even young now.
You know what? You'll always look younger today than you will tomorrow. So just enjoy it while you can.
That's a really good point. Very, very true. I will always look younger today than I do tomorrow. So David has been in my circle and been my associate and been in my friendship for a very, very, very long time. And today, the thing that I get to ask David is, okay, David, you're a believer in LA, and I currently own nothing in LA. Mm-hmm. So you had to convince me and my listeners as to why you really believe in LA and why you double down in LA. So let me read your bio for a quick hot minute here, and then let's get into convince me why I should still buy in LA. All right. David Coe is a realtor and investor who specializes in working with developers. David runs the CEO Real Estate Group, COE. That's the Co, as in David Coe, COE, Real Estate Group, which is based in the South Bay, Los Angeles. Besides being on the top of the Keller Williams teams for residential sales in the South Bay, Co Real Estate also has a new construction division, which is what I want to talk to you about. It specializes in selling infill residential projects in the greater LA area. As an investor, David is a partner in Capital Stack Investments. Capital Stack is focused on raising capital and investing in short and long-term residential new construction projects. David also founded the South Bay chapter of the For Investors by Investors group. You run the South Bay, I run the Pasadena. Jeremey doesn't run a meeting at all anymore. Not at all.
He's too big time for us.
Huh?
He's too big time for us these days.
It must be what it is. I don't know. I actually don't even know exactly what Jeremey is up to these days, other than his investment group. So
that's it.
David, welcome to the show.
Thank you.
I so appreciate having you here. You are both a real estate agent and doing ground up construction and working with other investors and helping them find properties for their work, all in the South Bay, Southern California market. I own nothing in LA. I am not happy with rent control. I am not happy with the statewide California rent control. When I did own in LA, which I did, I started in LA years ago, I avoided owning in the rent control areas like Santa Monica and Hollywood, where they had really aggressive rent controls. And now that I can't avoid it in California, I'm out in Indianapolis altogether. right? So I am a doubter of LA. So
But
you tell me.
well, first
why.
thing, I have a question for you. Are you renting or owning here, buying here in LA?
I own with my husband, to be accurate, I own nothing in LA. My husband owns our primary residence
Okay. And then how
in
much
LA.
time do you spend in LA versus Indianapolis?
I spend most of my time in LA.
Okay. Okay.
Yeah, I do.
I just want to establish a couple of quick
No,
bases.
I love you. You're setting me up to fall on my own knife. I think
I
it's
know
lovely.
you are. Don't worry. You've already stepped in the trap. You might as well
I
knock
have.
your foot off now because you're in it.
Exactly.
Yeah, I mean, look, first of all, before we launch into that, I just told the story the other day about that initial FIBI meeting where we met and how I got to FIBI, because I think it's important. I started off fixing and flipping houses in 2007, which actually was a good year to start. 2008, however, was not a good year to have a second year and start doubling down on bigger projects.
Okay.
So as I was starting to try to figure out what was macroeconomics and all these other things that were causing our projects to stall, someone had recommended that I go to a real estate investment club, and
Right.
Bruce Norris was speaking at Phyllis Rockweiler's group
Oh,
at the airport.
yeah,
So
sure.
I go to the group, and of course, Bruce blew my mind, right? He was and still is one of the smartest guys I've ever heard speak about real estate investing.
Yeah.
And then afterwards, we all rolled out to the networking session, and I got bombarded with everyone trying to sell me, their series, their services, their mentorship. And I was just like literally sitting on the side trying to hide from people. And someone said, hey, if you don't like this, I don't like this either, you should go to FIBI, right? So I was at Phyllis's group. So I assumed FIBI was another lady that ran a real estate investment club. And they said, no, it's not a FIBI. It's a FIBI, for investors by investors.
Right.
And then someone pointed me to Jeremy's group, and that's how you and I got connected. Was because I really dug the no sales pitch philosophy, and just the networking and the friendships I built through FIBI have really kind of changed my my story as an investor along the way.
Absolutely. The two things you need to be a successful investor: your network and your education. And that's the two things that FIBI focuses on: networking and education. We're not focused on selling you things. We're focused on trying to keep an environment that almost encourages being able to trust the people you're talking to by having this no sales environment. Personally, that's me. But we both run FIBI Chapter, so clearly we've drunk in the Kool-Aid.
Yeah,
we're clearly attached, right?
I'd say we probably guzzled it the last 10 years. So that is for sure.
It's true.
But yeah, no, I think the education part, when I started going to those meetings and you and I were becoming friends, and same thing with Matt and all these amazing people that I have in my world now. I always tell people that I got my master's degree in real estate, right, by going to FIBI and spending $20 a meeting and just getting all this information. And a lot of it starts to become redundant, but that's really when you start to learn it, right? The more you start hearing about it from different people's perspectives, the more it really starts to sink in. So, being active in my education and being active in networking is really how I kind of built my business where I'm in right now, and still how I build both my real estate business and my investing business that I'm involved in.
Well, and it's when I go to other meetings, one of the other things I do is I try to always meet because I have to know the meeting runner, right? I always try to meet the presenters. Because what better way for me as a professional to expand my network other than meeting other professionals that have been invited, especially if it's a FIBI meeting, they've already been vetted by another person who believes in the no sales, low sales environment, that education and networking is the primary focus. So I kind of I'm going to trust that presenter even more than I would it's maybe Phyllis's club, that they've paid Phyllis to be there, or Phyllis is being incentivized to have that person there because they know how to market really well. Well, I really want to focus on somebody that knows how to do their job really well. That's what I want to focus on in my club. And I don't want to put down these sales clubs. I'm sure each, like Sam's club is great. I personally think that Sam does a great job of vetting his presenters, even though he does have some sales at his club, right? So I'm not trying to make a blanket statement. I'm just saying I trust the FIBI chapter leaders. I know you guys, we're a network, we work together. I know that you guys bring the same due diligence and thinking about due diligence that I bring to the table. So I kind of just trust that.
Yeah.
Sorry.
And again, I think I've had a lot of speakers that were very uncomfortable in front of a room because they weren't speakers, right? But they
Right.
were really smart at what they were there to talk about, right? And I
Yeah.
think people learn so much more maybe from someone who isn't as polished, but on a stage in front of a bunch of people,
Right.
but on their Monday through Friday careers, being attorneys or being investors or being CPAs or all the different types of things that we try to pull together for our group. I think that's where people learn the most is from people working in whatever they're presenting on. Not just
have I managed to distract you long enough from the trap I've walked myself into about YLA?
Nope. I've still got it. I've still got it here.
Okay,
so
fine. Let's go back to it.
All right. So here's the thing about LA, right? How many people have you've heard say, yeah, I'm getting out of LA? And of course they never do, right? Because LA has a bunch of things going for it, right? Number one, we've got one of the greatest climates in the whole world, right? As we're getting ready to spend our Thanksgiving Day and debating, do we eat outside or inside? And Buffalo is shoveling 5 to 6 feet of snow off the ground. So we have a highly desirable climate, which we're always going to have. And look, sometimes we're, as a state, we're very protective of that climate, maybe overprotective at times, which seems to be the rub on California for sure. California also has one of the largest economies in the world. And no, it's not just because we're part of the United States. California just moved up. I don't know if you saw this. You probably did. California.
I only heard it from you.
Fifth largest economy. We're now fourth. So we just surpassed Germany and we're right behind Japan, right? So world economies, United States, China, Japan, California. And I know it's crazy to think about how big our economy is, but from an investing standpoint, one of the things that you want to have is job growth, right?
Yeah.
And job growth is a really, really important part of, especially for LA. Most of the stuff I do is in Los Angeles, not in Northern California.
Right.
LA has, I think, the fourth largest GDP of any city in the world, behind. Boy, I'm going to forget these. I know Tokyo. I know London. It might be Paris. It might be Shanghai. I forget what the three are that are in front of us, but let's just say that Los Angeles is a top 5 economy in the world. And part of what makes our economy so diverse is because it's diverse.
It is diverse.
Yeah. Entertainment, there's shipping, there's a lot of professional services. There's aerospace. If you think about what makes LA such a strong economic powerhouse, you can't just point to it's this or it's this. It's so many different things. And
we're getting a lot more like Silicon Valley type stuff too. I mean, we've got Facebook here, we've got Apple here, we've got Amazon is now here. I mean, there are some, not Amazon's primary headquarters, but a secondary. They're showing up here, especially. I know this because of Culver City, right? So they're all kind of doubling down in the Culver City area, which is now, incredibly expensive. It's as expensive, Culver City, the little dumpy Helms Bakery, Culver City. When I was a kid, you avoid going there, is now just as expensive as it is in the Pasadena, Arcadia area.
And El Segundo is the same way, right? El Segundo, we had a lot of aerospace companies that kind of consolidated and left behind a lot of empty warehouses. And, that's now become Silicon Beach, right? So there's a lot of tech, a lot of big money that comes through here. And, the narrative about California, and I'm not going to touch the political regulation because that one's, you're going to win on that one. There's nothing I can do.
Okay, good. I get to win on something. Okay.
Although I do think that we've kind of found a way to navigate that with some of the smaller multifamily projects that we're getting involved with, but I'll save that one for now.
Okay.
But when you do look at LA, and in particular with the types of jobs we get, we do have a high income type of person that comes here. Everything we just talked about, tech, aerospace, even entertainment, legal services, professional services, financial services, those tend to be, younger, higher income, dual income type of families that come here. And, people that are leaving here tend to be people that are, less white collar, more blue collar, because, if you're going to be working in a blue collar job, in LA. LA is very expensive. You might as well do that same job in Indianapolis. You're doing the same job, but you can afford a much better lifestyle.
Yeah, better lifestyle. Well, and also they just move further out. I mean, what I found in LA is the demographics, which is the infill, which, you know, I and you kind of live in the infill, and the infill of LA is really big. When you look at the infill of LA versus like Chicago, right? Or even Manhattan, like Manhattan is smaller than our infill, right? But it's huge, right? But if you look at the density of Dallas, Texas, or Chicago, or even Cincinnati, or you look at Los Angeles, like these are all cities I've looked at, our infill center is physically bigger by mileage than it is in these other cities. So where the blue collar live is further out on the trajectory, and there is a longer just pure drive time for these people. There are pockets in the infill, it's true, but really we have this very diverse, large infill footprint in Southern California.
Yeah, I think, and look, California, I think, is the #1 state for out migration, right? You know, I think, you know, people leaving California, you know, going to Texas, going to all these other places where people go to, California's #1. What most people don't understand is California's #3 for in-migration, right? So people moving into California, because if you are a young engineer, or you are a young attorney, or you are a young ad executive, or any of these, you know, really kind of high educated, high income types of people, eventually you're going to spend time in LA on your career path. So, you know, and the other, I always love this study too, Christina. How many times have you seen the U-Haul study of the cost of U-Hauls, right, from LA out versus other places going in? And of course, the changes are always different. Well, what that doesn't take into account is that people that move to Los Angeles move here from a global perspective, right? If I'm a Chinese engineer or an Indian architect or something like that, more than likely, I'm not going to move to Indianapolis. I'm going to move to LA, and I'm not going to be using U-Haul to get here, right? So, you know, so I think we have a stabilizing population, right? I think people want to leave LA because they think, man, there's no, you know, everyone's leaving LA. That's the narrative, but that's just not true, right? Our population has held pretty steady. And because of our economy and because of our climate, I think that those are things where the state of California and the city of LA are going to continue to grow over the next 15 to 20 years.
Okay, I believe that.
Based off of all of that, we're also in a housing shortage, right? And
we are very much in a housing shortage. That is very clear here. I mean, nationally, we're in a housing shortage, but I think LA in particular, and I don't even know, I'd be guessing at this point if I would even say other cities that are truly experiencing, right? Truly seeing families move here, young families, engineers and architects moving here going, well, where am I going to live? Crap, renting a room. When I was in college, which was a long time ago, I rent a room for $275 a month. Do you know how much those rooms rent for now? A room is $1,200 to $1,500.
Easy.
A room.
Yeah.
Please continue.
Yeah, no, look, I think that's a big part of it, right? So, you know, if you can find a way to navigate the regulation, right? If you can find a way to navigate some of the more, you know, tenant-friendly laws through here, you know, what you end up with is a market that's expensive, but it's a market that has a really strong economy, great climate, and it's undersupplied, right? So for our business, you know, you know, my real estate business, we're very much here centered. I'm in the South Bay of Los Angeles, which, you know, is pretty much everything south of LAX is where my primary real estate business is. But on the development side, we mostly focus on the city of LA, which is a huge city. It runs everywhere from, you know, up in North Hollywood all the way down to San Pedro. And, you know, we kind of focus on, you know, on that part of the city and some of the projects that we're involved in right now.
I'm so surprised, David, you didn't actually pull me into the bus. The concept is, but Christina, notice you live in LA. Notice you haven't left LA. You continue to live here. You're part of the population of LA. So you're trying to tell me why you don't believe in LA, but you live here.
Well, I figured it was obvious, but I appreciate you pointing it out for everyone as well. Yeah. You stepped in the trap as soon as you stayed in LA 20 years ago.
I am part of the trap. Why would people want to continue to own, live, and rent in LA, and therefore the population, the infill is stable in LA? It's because of me I am one of the people who has not left. We are one of the families that talked about leaving during COVID, did not end up leaving during COVID. There were too many of the amenities we needed were here in Southern California, and we just went, forget it. We're going to stay here, and we're going to stay here. Right now, I'm pretty sure we're going to stay.
And listen, I also don't want to say that I don't invest outside of California. I do have investments outside of California as well.
Yeah.
But those are more cash flow investments that don't necessarily have great appreciation.
Right.
LA is more of an appreciation investment that doesn't have great cash flow up front. But eventually it does start to deliver fantastic cash flow and appreciation.
Tactical investing, right? So where do you want to invest? What are you looking for from that part of your portfolio? It's not, I mean, for several people, when you're brand new, you're looking for, okay, I've got this one property, or I've got 2 or 3 properties. But as you get a little deeper into investing, it's more about tactical investing. I want this piece of my portfolio to do this, and I want this piece to do that, and that this piece is available in Los Angeles, but this piece is available outside of Los Angeles, because you're intentionally creating a diversified portfolio, which has different, just like investing in stocks, you have different, what are those called? I just lost it. We have the finance versus the tech versus the, right, where you finance, where you have diversification.
Diversification. I mean, it's really what it is, asset diversification, which honestly, Christina, is something that that's one of the lessons I learned from you, right? When we first met, we were so focused on buying an investment, right? But what I learned that there's no one investment that does everything, right? So, you need to look at how things kind of match up, and this might do this well, that might do that well. I love being on the lending side of things, right? It lowers your liability tremendously, but there's no tax advantages of owning paper, right? You get tax advantages by owning property, right? So, there's different parts of the portfolio, and I probably over the years am more of an active investor than most of the people in our circle of friends, which tend to be more on the passive side. And you are going to be active, you want it close by, right? So, I've tried to fix and flip houses in Jackson, Mississippi. It didn't go very well, So if I'm going to do that, I'd rather be here where I've got people that I know and trust, and most importantly, can keep an eye on.
I've got one guy in Indianapolis, and he is true blue. I can count on him. He's going to show up. He's going to make sure the crew's doing what they're supposed to do. But how many people have I sort of gone through in Indianapolis, and before I found this is my dude, and he's honest, he's authentic, he's integrous, he's local. I mean, he's just good. He's just good, but it took moving through a couple different contractors and a couple different real estate agents to get there. Right. So, all right. So development. So talk to me about Capital Stack and your company Capital Stack and what you guys just do. Or talk to me. Actually, let's stay with this for a minute. You're a real estate agent. You buy and sell for investors in Southern California. Clearly, you believe in Southern California. Clearly, you have investors that are your clients, because that's one of the things you specialize in. So talk to me a little bit about that.
Yeah, so I mean, we're based in El Segundo, which is where our office is, and I always tell people that kind of our little circle runs from Long Beach up until Inglewood and Marina Del Rey, right? That's kind of our core part of the city that we're involved in. We do work with a much larger number of investors than most realtors do, because of my background and because of my involvement in FIBI. We've got some investors that are fixing and flipping. We've got some investors that are buying and holding. In particular, we've got multiple investors right now that are trying to scoop up 2 to 3 unit apartment buildings with detached garages and converting the garages to ADUs.
Okay.
While the legislation of California taketh away, it also giveth. ADUs are a phenomenal way to increase the NOI on an investment, because it allows you to add a door without going through all the hassle that we have to go through when we're building, doing ground up new construction. So we like those kinds of investments. And my personal portfolio, we own multiple properties here in California, which weren't always getting income, but after we've owned them for a while, not only have we gotten income, but we've also gotten equity that puts us in a position to reposition that equity into owning more assets. So,
okay. So I'm sharing my screen here. I've intentionally hijacked it. So I'm sharing my screen here because you said this is your page. This is David Coe. It's the David Coe page, or it's Coe at.
The address that we publish is coregroup.com. So my last name, Coe, Real Estate RE Group. And, you know, of these listings right through here, right, that first property is a property that an investor owns that they're keeping and holding as a rental property. The second property there is a fix and flip that we're doing in Long Beach, Bixby Terrace. The third property there is actually one of our clients who lived in this place in Palm Springs, but they're now moving out, and they were holding it as a kind of an Airbnb property. All right, so it's an apartment, you know, in Palm Springs. Then actually, if you can scroll over one more, I even think the fourth one was an investor, if I remember correctly. Oh yeah. So that property in Hawthorne was also, and it is owned by an investor client of ours. And they've been holding that property for, I think, for almost 10 years, holding as a rental property, and now they're looking to sell it. So, you know, look, that's a big part of our business is working with investors. You know, other things that we have through here are just more single family homeowners, you know, people looking to buy and sell. You know, I've got a team, right? So, you know, what I always like to tell people is that there's no one agent that's going to handle you better than my team will. And, you know, so we've built a really strong real estate business. And I think one of the things that from a young investor level, and this is a conversation I actually had with a couple of people in Pasadena when Bryan and I spoke there a couple of weeks ago, is being involved in real estate, right, is the best way to learn about real estate. So maybe you don't have a bunch of money to invest right now, yet you need some transactional volume. You need some transactional velocity to really get your feet in and kind of, you know, just to start seeing terms. So, you know, we encourage a lot of people that are looking to get started, get your real estate license, right? You want to talk about being involved in transactions, right? It's a great way to do it. You don't need capital necessarily to get started, but you'll earn capital, right, that you can use. And instead of having to, you know, work this job over here and try to do real estate as your side hustle, make real estate your hustle, right? And just work at it in two different ways. So that's why I still am involved on the residential side. You know, that's now my day job. And look, the money that I make from that is what I'll use to invest. And one of the things that we really saw an opportunity on was, you know, creating housing in LA. You know, we saw there is a lack of housing in LA. So, you know, a few years ago, my partner, Bryan Miller, who's my partner in Capital Stack, you know, he and I, you know, started looking at doing more active things together. We started fixing and flipping. We started getting involved with other, you know, fix and flippers, both on that debt and the equity side. And we saw that there was an opportunity in new construction and creating housing. So, you know, the way we like to do things is we aren't the direct general partners. So we're not developers. Well, I shouldn't say that. Technically, we are developers. We're not builders or contractors, right? So we're not day-to-day responsible for the creation of inventory, but we do develop in the sense of, you know, we'll raise capital, we'll help structure deals together. You know, sometimes how the pro forma is structured is where you can create opportunity. And that's something that Bryan and I have done. So, you know, in the last 5 years, we've been involved in 5 different small lot subdivision projects, ground up construction. 3 of the 5 are completed. 2 of the 5 are nearly completed. We've also done some smaller multifamily, you know, and small multifamily. We've got a 15-unit project in Gardena that's coming out of the ground. We had a couple of projects in San Pedro where we were involved in helping to raise capital to get through the planning phases. Turned out through the planning phases, those were opportunity zones. So we were able to sell the projects with the plans in place to a big opportunity zone fund, and then building those things out. You know, so we like the build to sell and the build to hold model. And the one that we're, you know, currently kind of working with is doing smaller format multifamily. which is what we'll talk about here in a minute. But one of the things with these bigger projects is they're just time consuming, and all the things that you hate about California are absolutely things that we're dealing with, right? So
yes, that's right.
Getting plans approved, getting through construction. I literally had 2 meetings today, and the Department of Water and Power out here, DWP, is basically a mafia, and there is no competition, and you're stuck with them. And projects are just being withheld, for weeks, if not months at a time, just trying to get utilities to the project so you can get certificate of occupancies. So it is complicated. It's not for everybody. And one of the things that we started doing is, as we've gotten more experienced in this, we're looking for projects that are less complicated, just because, one of the biggest detriments to a new construction project is time, right? And time is
time on your budget.
Time costs a lot of money. I actually love it. I just saw that Tariq, from HGTV, him and his wife used to have a show, and they've split, and Tariq Al Musa is now doing a fix and flip show. And one of the things that he has in the lower corner is a clock. It's actually not a clock, it's a counter of how much money they're spending in debt every single day, right? So as it goes through this project, and it literally, like, every few seconds, there's dollars just kind of adding up on that.
Good. I'm glad. That's because that is time. I mean, it's the biggest. I mean, I flipped houses. You have flipped houses. I no longer want to ever flip a house other than for, like, preparing for rent, right? Like, I'll buy something, I'll burr something, right? Whether it's a single family or 4-door or whatever, but I don't want to prepare it for a flip anymore, because it just, that time works so hard against me. And that to me is wearing as an investor. And I don't want to do that. As a young investor, it was fun, and it was cool. And it was, like, I've had enough.
Yeah, no, and listen, the last 3 years dealing with all of that complicated process, and then you add COVID on top of it, has really created, all kinds of barriers. So that's one of the things that we're looking at now is first of all, while we're building residential units, we're building commercial grade projects, right? And dealing with commercial, the legislation and the regulation around a commercial versus a residential is way different. So we've really been focused now more on looking at 2 to 4 units, 2 stories, not 3 stories, or 4 stories, just because it's all lumber, no steel. The key word for us is by right. Right. We like to do things that are by right. The law says you can build a box this big. That's all we want to build, right? We want to stay within the law. We're not looking for, bonus density, or, we're not trying to get away from parking. We're not trying to, increase the amount of square footage that we have on the lot. Let's just build what we can, get through our planning and approval process very, very quickly, stay out of CEQA, which CEQA is something in California. It's a California-wide thing that basically allows a community to oppose a construction project, but if it's residential, CEQA doesn't apply, right? So staying underneath kind of that layer of complexity and getting through projects that we can get through entitlement quickly, and then more importantly, because they're not super complicated commercial projects, the residential we can build quickly. That's been where our focus has been, probably more so in the last year.
Okay. And that makes sense. There are people, I feel like for my listeners, I need to clarify very quickly, there are people who find their niche, right? And you guys have defined okay, we're going to go this way with our niche. And there are other people I know who are hey, no, they only want to build within a certain amount of distance from the metro because they want the parking variance. They don't want to have to deal with the amount of requirements that California has, because we're very car heavy. Right. And they can have I don't know if it's a half a parking space per unit or something like that, or 1 instead of 2 parking spaces per 2-bedroom unit. They want to have smaller amounts of parking because they want to be in that. But it's all about navigating this infill, right? Really understanding where your niche is in the infill, because I assume all of California, but definitely Southern California, is highly regulated. And therefore, it does take a level of professionalism to be able to do the ground up develop that you and Bryan have moved into.
Yeah, and you'll like this one, Christina. One of the advantages of doing new construction is that it's exempt from rent control for 15 years.
I will like that.
Which,
that will make me, I would consider buying something brand new for that reason alone, and then selling it in like, with 5 years left in the,
year 14,
own it
right?
for 10, sell it so the next buyer gets the last 5 years.
Right. Although, I can say that, look, the rent control in California, now look, LA, Santa Monica, there's some local communities that have some much more restrictive rent control. Right. But what the state of California enacted is actually pretty fair, like
talk to it, because I agree with you. I actually agree with you on this one. So lay it out.
I mean, look, I think you're maximized at raising rents 5%. With some kind of CPI, which I don't think you can go more than like 8%. Which if you could, that kind of gives you the ability of a landlord of having to raise the rents because you don't want to fall behind.
Right.
Also restricts you from raising the rents astronomically high and inconveniencing a tenant, right? So I think it's good landlord practice, right, to not raise your rents 15% in a year, but doing it in smaller chunks where it allows your tenants the ability to kind of, keep up, hopefully, with their income. I thought was a really smart, savvy way to do it. Now, COVID has certainly added all kinds of additional regulation that we've had to deal with, but the base California rent control, I think, is pretty fair and very easy to operate in.
And again, I think it is about professionalism. I mean, the difficulty of more and more regulation is that it does make it harder and harder to get it done. So that requires the more and more professionalism in planning, being able to do it ahead of time. As you talked about the LA mafia, right? Like clearly the permitting office there isn't another choice, right? I ran into that in very much so in one of my projects. It took me 18 months. At holding it up at $500 a day, I had to wait 18 months, $17,000 a month times 18 months. That was just my holding cost just to try to get through the permitting process from beginning to I think we had 2 amendments, right? So we got through that and we had 2, with plan checks, right? Plan checks and plan corrections, right? So 18 months for that process. That was a lot of money. I was not happy about putting out that much money just to hold up a property.
Which is hard because you're getting no income when you're doing new construction, right? Because it's hard to lease sticks and, finish construction projects.
Well, which is part of why I think they break it apart. You buy the land, you only pay the debt on the land that you got. Then you move it through all that process. You get it to permit ready. And then you go, okay, I'm going to sell it now. And let somebody else come up with another big chunk of cash. They're starting the timeline fresh. They're going to actually build the construction. Now they've got this. Now it's really just construction. And they're able to manage that, and then they sell it at the end result. I think that's why these things get broken up into these 2 stages. Right?
We've played both sides on that coin. So we've done some projects where we've just done the entitlement work and then we sold it off. So entitlement is when you get your plans ready to issue. And then we've also, from a new construction standpoint, we've bought projects that had plans in place, right? Because, some of the larger projects we're in right now, we didn't take it all the way through entitlement, but the delay in entitlement created friction within the investor pool. So they were willing to sell it and let us come in and capitalize it and take it out of the ground, which means, not that building is easy in LA, but at least there's a plan to follow, right? Yeah. Versus the entitlement, sometimes you can just veer off course. If it gets tied up in the courts, you have no idea how long it's going to take to get
That's right. Yeah. With construction is more in the hands of because you see staying, diligent and correct and on course, and it's more under your control. Whereas permitting and entitlement really lies within the timeline of the city and not inside of your timeline.
Yeah.
So there's a whole other question I would love to ask, but we don't have time to ask it. So I'm going to move on to my next question. Okay. My next question is, tell me about how something went wrong, either for yourself or one of your clients, how it got fixed, and what's the lesson that we as investors need to know from that story.
All right. So I'll talk about a current project that we're working on now.
Yes. Great.
And it definitely had a COVID component to it. Now, I don't think it's fair to say that COVID caused the problems. I think COVID exasperated existing problems. That's the way I look at COVID. And one of the things that we learned is, once all of a sudden we started hitting additional roadblocks, was that this particular investor developer we were investing with had a project manager, but didn't have project management. And those things are completely different things. Now, in a perfect world, they align, right? But just because you've got a project manager, if there's no system behind it, there's no process to track it, if that is failing, then it's hard to complete construction. And the biggest issue is that there are so many variables and dependables. If you're just taking things as they come at you, you miss opportunities. And then when all of a sudden there's supply chain issues and something that you should have ordered 4 months ago because you knew it was coming, and normally you can order that in a week or two, but now it takes 6 months, right? Those are kind of the unnecessary delays, shooting your own selves in the foot that, we got up against just because when COVID hit, things got harder to do. But COVID wasn't the problem. The problem was we didn't have a good project management system to navigate around the additional hurdles that COVID had caused. And I think that was a critical lesson. And again, from what we were just talking about with time is toxic to a development project. So now when we're vetting potential building partners to deal with, or even on some of these projects where we've had to step in and take over, we're making sure that what's built, what the project is being built on is a firm project management process and schedule where there's, if not daily, at least bi-weekly, tri-weekly accountability check-in points. Someone has to be not looking at what happened today. Someone has to be looking at what should be happening a month from now and figuring out what we can do to reduce the amount of time, in the project. And I'd say it's probably the biggest lesson that we've learned. And as we move forward, as interested as I am in seeing what you're building, I also want you to get your computer open up and tell me, how did you get that done, right? What kind of system you're using? How do you manage it? What's your process? How often are you checking in? We want to understand the process of the process behind what's being built, not just the end product of what's being built.
And let me put that into like a bigger framework. So my newer listeners might be going, well, doesn't the GC do that? Well, some do, but many don't. They just go, hey, lumber just happened to show up, so we're going to now do da-da-da-da. Or, gee, we'd like to have the fence. Oh, I think we're ready for it. Let's order fencing now because I don't want it sitting on site. Yeah, but if you didn't order it 3 weeks ago, now it's not going to be on site for 3 weeks. So now I've got 3-week hold time. Means nothing to the GC. 3-week hold time means he gets to move his crew to another project that he's already feeling behind on, and then come back to your project. But to us who are holding the project, time is toxic. That 3 weeks is expensive, right? That's a $5,000 chunk just waiting 3 weeks, period. And that's just on my projects, which are single families. Yours are multi-units. So that's one answer, is the GC. The second is what you're describing, I feel like falls into the box of, well, how do you, as an investor, whether you're passively investing or actively investing or doing what you guys are doing, which is sort of a joint venture where you guys are merging teams, really you're looking at, does this team have all the elements they need? And part of my due diligence is, yeah, they have a project manager, check the box. Where's their management system? Who decides when everything's going to be ordered? I had one GC that didn't do it, and I had one GC that did do that. And I was like, oh, that's really great. And even the GC I had that did do that, I developed a more extensive system than that particular GC had in order to be able to manage. No, we can't do this singularly. I need to do my landscaping team, and I need to do my internal V work and my external. All of them I want to try to put together because this is expensive to hold up, right? So there was another layer on top of a very competent GC that I still had to put in place, right? So I'm just saying it's part of the due diligence process.
Yeah, it is. And look, that if you've got a GC that's actually doing some project management, I think that's a rarity. I would say it's actually two separate skill sets, right? Part of a GC's skill is problem solving on site, right? Yeah. Well, that kind of, I'll figure it out when I get there, is the complete opposite of the personality type that says, I want to have everything planned out for the next 6 months, right? So I think to have a really successful team, you have to have two different types of personalities on the team. One that excels and trying to look at everything way out, and one that excels and because even when you plan everything way out, there's always field adjustments that have to happen, and you want a good, competent GC that has the ability to do that.
Do that in the field.
I would say that's probably been the biggest thing is I run a real estate team, right? And the reason why is because I'm not great at everything. And there are people on my team that have way more skill and way more time to do certain roles in our team better than I could do if I was doing everything. It's the exact same thing happens on an investment. And whether you're fixing and flipping, if you're just fixing up a house to rent and you're hiring a GC, all the way through, you want to invest in some large, passive multifamily deal, understanding the systems behind the investment or creating a system if you're doing it on your own. That's probably the most important thing you can do as an investor, is either creating that or analyzing that and making sure that, this fantastic plan they've built actually has a chance at succeeding.
Beautifully described. All right, David. So financial freedom. So why use real estate to break through to having your financial freedom? There are a lot of other good jobs. You're a perfectly great real estate agent, and you're perfectly great at running a team of real estate agents. Why continue to use the more complex areas of real estate to break through to financial freedom?
Well, it's something I'm passionate about. Right. So I think that, look, you can probably build financial freedom in anything if you're passionate about it. I love real estate, and I just so think that it's a fantastic vehicle for building financial freedom. Real estate, and I think right now is a perfect time to think about the advantages of real estate, right? While the prices of real estate might be starting to level off or maybe, maybe decrease, that's a paper loss, right? As long as you're not selling it, you're not actually losing money. If it's actually, still generating rental income, which, rents have stayed pretty steady, especially here in Los Angeles. If anything, rents have gone.
Housing shortage
has gone up, right? So, the best thing about real estate is the fact that it gives you multiple ways of making revenue. We've talked about cash flow. We've talked about appreciation. We touched on tax benefits. There's some fantastic, just a little bit, right? Some fantastic tax benefits. But real estate also gives you another one, which is called, depreciation, right? So you can leverage real estate. And as long as you do that reasonably, if I were to buy, let's say I needed $3 million to be independently financially free, right? Well, if I'm going to do that in the stock market, I need to make $3 million in addition to whatever money I'm making to support my lifestyle. Versus in real estate, I might only need $600,000 because I can then leverage that to buy $3 million worth of real estate. And, so I think real estate gives you, 4 opportunities to create financial independence and wealth, whereas other asset classes might only have 1 or 2 of those.
Yeah, absolutely. Depreciation, appreciation, tax shelter. Oh, and by the way, cash flow.
And it gets cash flow as well.
And it gets cash flow as well, right? Whereas stocks, like you said, there's no leveraging in stocks. So you can't even leverage your cash flow. So if you do get a dividend, it's not like it's a dividend against your full investment in that stock, not a dividend against a quarter of your investment in that stock, right? Which is the advantage of leveraging. All right, David. So what does financial freedom mean to you? Why? What is it? We're all chasing financial freedom. What does your financial freedom mean to you?
So actually, this photo right behind me is a picture of the John Muir Trail. It's a map.
Yes.
And we are slowly, biting off little chunks of it. Financial freedom for me is being able to get out, be in nature, actually get away from the grind. And while I love being in LA, I love being out of LA as well. We're getting ready to head over to Sedona. We got 4 days of hiking. So, financial freedom for us is leveraging and trading in the equity in our real estate portfolio and being able to use that in a way to where we can go out and, spend time with family, spend time in nature, getting some exercise, getting some sunlight. Because as you can see, I'm a really pale guy. I need to get all kinds of sun.
You get really dark when you're tan. Oh my gosh, you get seriously dark. I'm just saying.
Yeah, I know. So look, that's what freedom is for me. Like that's our passion. We love to travel. We love good wine. We love hiking. And, owning real estate. And, we're still on our path. We're not done yet, right? We still are continuing to create and acquire assets. So as we get older, we can leverage those assets and the cash flow that they can generate, to be free. And free for us is not having to report to a job every single day, right? I can do something I love, which is, I love real estate. I love the process of real estate. Everything from completing high-end commercial projects to helping a first-time home buyer buy their first home. I love that part of real estate as well. So it's something that I'm passionate about, and something that we can use to provide for our family in a way that my old W-2 career just couldn't do.
David, if anybody wants to get a hold of you, what's the best way to get a hold of you? They maybe want to find out more about Capital Stack. They're an investor. They want to find a professional real estate agent that can bring them an investment property, or they're just looking for a single family residence as a primary residence, but they need somebody who's an expert in the South Bay area.
So best way is to send me an email. My email is david@coe, COERE group.com.
Easy enough. David, thank you so much for being on my show. I so appreciate it. And thank you, my listener, for listening to Real Estate Breakthrough. Tune in every 2 weeks for a brand new episode.